kind of nice to know. So I think we should probably do a poll when we have these kind of things just to see. But just can everybody raise it? Everybody having a similar problem? Just curious. But we can take these things up with SARS. We have the national meetings and regional meetings, but it's just something we're going to have to deal with separately. I'll speak to Cecile Botti about it. But the more noise is coming out of AIT for me right now.
Yes, absolutely.
Yeah.
Okay, so righto, so I think that's enough on the registration side. Now we're into the whole provisional tax conversation. And clearly that raises a lot of alarm bells as far as penalties, interest. A trust is a taxpayer of last resort. So we're sitting with a very unique situation where people traditionally left the taxes of the trust right till the end. And now it seems like SARS moving those things forward and forward. And since last year, SARS started making noises in their webinars that they are moving towards a real-time scenario where they want third parties to provide data on a monthly basis. So yeah, I think that is a very almost want to say opportunistic thing at this point, given where we're at. I, scratched around a lot to dive into, trusts specifically, are they provisional payers or not? And I came across some documentation of SAIT, and they also had a tax in practice session in March 2022, where they spoke about timelines. And in there, I already saw that SARS is moving towards a single deadline for tax submission. So I immediately start feeling really sorry for the tax practitioners. And in there, they mentioned that SARS is looking at a September date for everybody. So, this conversation we're going to have now with the trustees a provisional taxpayer, because then we may buy 4 months extra time potentially to submit these tax returns because of the heavy workloads. So I don't know, Keith, whether there's anything more being said. I know people have objected to the September suggested submission timeline. Is that how you have it?
I mean, yeah, well, it's similar. Look, I know that and I know they pushed the IT3T back. The provisional taxes, and there's a little bit of noise there, but I haven't heard completely. I think, as we said in the last discussion, when must you file a provisional tax return? And does it matter? So I'm just curious, because when we spoke yesterday or 2 days ago, whenever we spoke, I mean, if you allocate all the income to other people, to the donor or to the beneficiaries, there's nothing really there. But I guess technically the income starts there and then is reallocated, but maybe not. I mean, Section 7 reallocates the income completely. So I would argue that if you have a complete reallocation, then you're done. I think it's really required a little bit. Maybe we have a little legal discussion here on this one. Now, I've got Lisa Kahanowitz in the background, former Treasury. She's sitting there smiling at a picture from SAIT, and we seem to be getting along better these days. I mean, Lisa, have you done some legal work on that, just to give you a hard time over there? Where's Peter?
Sorry, Keith, I didn't hear you there.
Okay, what I'm saying is the argument is that obviously, because I'm a little late to this debate, that a trust has not been filing provisional tax returns, right?
Yes.
Now, they are a person under the Act. So as a person under the Act, we would worry about provisional tax returns. Now, but typically what happens under Section 7, it's being allocated to the donor or the beneficiary. So if all the income is allocated, well, let's take a look at Section 7 for a minute. Let's take any section, 7.6 or something, or 7.5. If the income is allocated, it never rises in the trust in the first place. So if it never rises in the trust in the first place, how can it be a taxpayer? So I think it's
exactly.
It's worth a little bit of. I think if you just need to do a little legal write-up, maybe this is a fun little thing for the weekend. I don't know, but it's. Look, I'm not getting paid $20,000 an hour just to do that, but I think, but obviously most people, that's what they've been doing, just to clarify, Phia.
Yeah, yeah.
And Michelle, and you guys kind of talked about it last time.
Well, I think that is where we're having the beautiful difference of opinion today. So before Michelle and I are getting into a fight here, I am trying to launch a little poll. I'm becoming really fancy now. So I have got a poll for you, and I would love to see, the question is, are all trusts automatically provisional taxpayers? So you do not have a choice. So that is the wording of the current legislation, requires all trusts to be submitting provisional tax returns. Let's see, give it a couple more seconds. And I was so hoping we'd have many more people on, but we'll see.
Yeah, well, I guess again, what have people have done? Obviously, they haven't done it, right? But they definitely want more real time. I didn't understand where that was coming from. So step one toward real time is provisional. So you can see where Keysmetter's mind is at, right? So that's what's scaring the crap out of us. But okay, that's just a foot. But yeah, I mean, let's just go to the key section again. I'm gonna keep looking at the wrong one. Let's go to 19.
Yeah.
Yeah. Every provisional shall make payments, make interim tax to be paid, to be deemed to be normal tax. I mean, we go back to provisional taxpayer. Okay, any person who derives income, any company, any person who's notified by the commissioner. So I mean, when I'm looking, any amount that does not constitute, it says means any person who derives income. My problem is if the income is allocated away completely by Section 7, assuming you've done it right, did you derive income? Now, you actually might have derived income, but you were deemed not to. Big debates as to whether you deem some, if you don't deem it, deeming it means that you don't have it. So we had a big, at one time we used to separate notional deeming, notional deriving from the other. So, I could see the issue here, but my gut is telling me if you don't have any income, it's going to be kind of hard.
Yeah.
And the question is why?
Yeah.
But we'll have to look at this a little closer. I think it requires a little bit. But is the point this? I just want to clarify. What happens at the end of the year, hopefully, and there's no retroactive redating, but I'm sure there is, that, people are doing whatever they're doing, but maybe I'm wrong. But assuming I allocate the money out, look, if it goes to the donor, I don't have to do anything, right? Assuming that. The second thing is if I have money that's not going back to the donor, then I'm allocating, I'm actually allocating the income to the beneficiary. May not be allocating the cash though, right? Or do I always do the same as a practical
So you can
matter?
just make an allocation. The cash doesn't have to follow immediately or anytime soon.
Yeah. So the gain is 7 is recharacterizing it. So I mean, let me just take a look. I think what we need to do is just take a look at the legal thing. Maybe I'll write something up. Let me see for fun. I'll speak to Peter von der Swan. I always think he's fairly good. Maybe we can throw it to Michael Honeyball and maybe Mizanski, and they'll get all worked up and yell at me for being stupid, and that'll be fine. And I'm happy to hear what they have to say. But we'll throw out to a few people and see. But I think that's what we're going to have to do.
Okay, so
it's a set issue.
Yes, let's have a look. So I think I hope I can swing the fence sitters to go to no, because the yeses are winning at this point, Michelle. So yeah, 48 or 62% are saying yes, and 38% are saying no. So you can see there, we obviously need clarity, regardless of who's right and who's wrong. It doesn't look like, there's a clear cut. And I think that's all I wanted to demonstrate is we are sitting with an issue here. And I think particularly so because trusts haven't been dealt with very well in the definition of, as you rightly said earlier, Keith, who are provisional taxpayers. So yeah, so the fence sitters, I hope I can take it as a no. Right, so let me just get rid of this now.
Just a question here, Phia. What is their basis? Is their basis that they're a person other than a company who derived income?
I think it is that derived income that that people
derived as opposed to receipt or accrued.
Yes.
That's, I think, the S. I just want to make
That's
sure
it.
you
Yeah.
posed it right. Okay, cool.
Okay, so I just started kind of bigger picture and said, what is provisional tax? What is SARS trying to achieve? Clearly, they want an advance payment of a taxpayer's normal tax liability. So I'm saying if there is a tax liability, you know, there's advance payments, and that's why SARS requires us to submit provisional returns to make payments. So you actually catching a person who would be liable for tax for that full year, right? I'm not sure if my logic is still good there. Then clearly they want a smoothing of tax payments. That's kind of the rationale for doing it for the full tax year, and they're spreading it over 1, 2, and potentially 3. And those physical payments are then credited against the total tax owed for that particular year. And then clearly SARS would refund any overpayment. So that's kind of my big picture. Then when you look at paragraph 1 of the 4th schedule, Keith, it says what you said earlier. It's a person other than a company. So they didn't deal with trusts. They don't only speak about natural persons. So then clearly, Michau, your trust must be in that definition of a person, because they're only excluding companies. So it's a person.
Well, it is defined in Section 1 of the Income Tax Act, person, and that includes trusts.
Yes, that's what I'm saying. So the fact that only excluded companies means that a trustee is included in that remaining person that they refer to there. So that's remuneration. We're not too concerned about that. The second one is the one where we kind of getting stuck. So that is a person other than a company, again, who derives income. And I think that derives is a problematic word. So it's income, it's not taxable income, and we kind of need to unpack that or need clarity because we can see the split. I mean, it's if I can grab the fence sitters, we probably are going to get close to a 50-50. Okay, so clearly it's not remuneration as defined. Then they separated out a company, and then interestingly, any person notified by the commissioner that he's a provisional taxpayer. So when I spoke to SARS and said, you know, help me with these difficult concepts, they said, well, that one actually leaves it widely open, but, you know, haven't really seen where the commissioner notified somebody that you are now a provisional taxpayer. So clearly the definition in paragraph 1 does not specifically deal with trusts. And I would have liked to see, you know, a trust wording in there, because it may have a major implication. It's not like companies or others, you know, a trust is a taxpayer of last resort. I mean, we may sit with a situation where either the trust or the donor funder or the beneficiary can pay the taxes. So clearly there are two views now, and that's what the poll that we had. A trust is not automatically a provisional taxpayer, and that seems to be the view of SAIT. They have brought out a whatever they call it, a notification in July 2022, where it said that they've gone through the whole argument because of these you know, mismatches. And said that SAIT regarding a trust as not automatically a provisional taxpayer. You have to go through the rules. And they kind of lean towards saying deriving income means, my very first slide, the purpose of provisional tax is to get the collection of taxes timeously, not to stick with kind of a rule-based, and, you know, the fact that they haven't dealt with it in paragraph 1 is probably the issue, and derives income are the problematic words. Unfortunately, the 62% are saying a trust is included in the definition of a person, and therefore trusts are included in the definition of provisional taxpayer automatically. And Keith, there, I think you kind of answered us, but I think we're probably moving towards, we need clarity. So in SAICA's notification, they said that they have escalated already last year with SARS. They haven't gotten any feedback. When I spoke to SARS in terms of, are trusts automatically or are they not, you know, after Michau raised the issue, SARS referred it to their legal, and they said no, they were gonna work on the definition, and then the feedback later was they happy to leave it as is for the time being. So that's where we are in terms of guidance from SARS, where SAIT have done something, and I'm sure SAIT could kind of jump on that bandwagon as well.
This is a pragmatic matter. I mean, if all the income is allocated under 7 back to the donor or the beneficiaries or whoever, provisional tax returns of 0 don't really do very much.
Yeah.
So I'm not sure what that would gain them. I think what they probably would want to see if they wanted to really get something is you would want to know how much income is arising from the trust before allocation. And so I guess you already have that on a trust return. I haven't checked the trust return. Now, in the trust return, does it say, look, here's income that we're receiving, but it's not mine, it's somebody else's? Does the trust return tell you to put it down even though it's not your income? If it is, getting it mid-year isn't going to really make much of a difference.
Yeah.
Maybe. But then I think, I don't know. What does the trust return says? You put the amount down and then you allocate?
Yeah.
So Keith, you put the amount down, then you can claim certain expenditure against that income, to calculate the taxable income, and then the taxable income gets distributed or attributed.
Yeah, but you see, I guess maybe that's the question. I mean, in order to be taxable income, I have to have income. If the income is received or accrued or deemed received or accrued to the donor or to the beneficiaries, it's not an income deduction formula. That's a U.S. system. The U.S. is the only one who does that, so they don't have taxable income. They have nothing. Everything is allocated out. So maybe if it's all allocated out, I would say nothing goes on that trust return. What you'd want to say is the word is maybe derived or something, that if the money before application of section 7(8) is what they would want that on the return, because then they would see where the amount is centrally allocated, and then they can put all the pieces together. So the question is year end as well. And then yes, would it help them to get it mid-year?
Yeah.
The only benefit of mid-year is if they want to know the IT3T, but I'm not sure if that helps them much. So the question of, just to have forms, you got to make the forms useful. So I'm not sure, but anyway.
Yeah, so I think back to, the definition. So it's clearly people who earned the income. And I think they earned, does it get impacted by the trust or the trustees becoming like a conduit? And that may kind of taint this whole wording in terms of, income, that you actually made income. So it's the gross income, according to Michau's kind of arguments, gross income received or accrued, and during a tax year, less the exempt income. So they don't speak about taxable income. And I think that is where, when you go through, Michau's argument, it is correct. And then obviously it excludes natural persons do not derive income from carrying on a business, in certain instances. And SARS, initially thought that a trust may actually get out, as far as it's concerned, but clearly they only speak about natural persons. So we can't use that exclusion to help us there. Okay, sorry, there's still people joining, so I'm just like juggling here between stuff. Okay, so now the question is, are trusts automatically provisional taxpayers? 62% yes, 38% said no. SAIT brought out that notification, the alert last year, and in there I basically summarized what they said. Even though trusts may have been registered provisional taxpayers, they are not automatically regarded as provisional taxpayers, because we'll speak about it now, where Michau recently got a reminder from SARS to say, please remember to submit your provisional tax return. So the trustees weren't even allowed to go through this process to do that on kind of an annual basis now, and say, do you qualify or don't you qualify? So before 2010, it was a requirement for trusts to be registered as provisional taxpayers in terms of section 17(8), but this was now deleted. So it now seems to be no longer like a rule base. you have to go through those rules and then decide whether you have to submit provisional tax payments based on the taxable status at the end of the year. Okay, so trusts are not listed separately like companies, and we've highlighted those two viewpoints, and I think that's where we need clarity from SARS, because clearly the poll showed that there's a huge disagreement in terms of how it should be interpreted. The fact that SARS reflects that this person is a registered provisional taxpayer is irrelevant. Michel's reminder that she must submit provisional tax returns for the trust. It's actually determined on assessment whether or not the person should have made provisional tax payments. As Saika said in alert. If the trustees of a discretionary trust vest all their accruals in a year of assessment, the trust will not be provisional taxpayer for that year, because there's not going to be no taxes payable in any event. So why are you then providing provisional tax returns if you know it's going to be zero? And then the whole penalty thing of you relying on the fact that you're provisional payer, and that's why SARS tried to give one deadline for all types of taxpayers for final submission of their annual tax returns, is because in 2021, some individuals still were riding on the fact that they, can write it out till January before they submit tax returns, and then they weren't provisional taxpayers. So SARS penalized them on those administrative penalties. So I think, this is what it boils down to. If you are taxable, or, there's tax payable at the end of the year, then you were supposed to make provisional tax payments. There's no other reason why, just as a rule, you have to submit provisional tax returns. And Saika specifically referred to Section 25B2 of the Income Tax Act, which deals with that, the conduit principle, and basically then disregards the trust as having, earned the income itself for tax purposes. I'm not talking about in the economic sense.
Yeah. So, just to state it differently, let's say I've got some money going out back to the donor, the rest of the money is going to be distributed. I haven't done a resolution yet. So I did earn income. So I have taxable income mid-year, but at the end of the year, I won't. Now, that's the question. So is it taxable income while you're provisional? Or is it, and then it's deemed not to be? Or is it, or is it never is? Because if you take a look at the year-by-year assessment, and therefore a provisional return is only an estimate. And at the end of the day, there's nothing that you're not going to have any income. So I think there's a second issue as to when the taxable income is derived or arises. I think that's the point.
Yeah.
And I think that's what you're raising.
Absolutely. Okay, so now what does one have to do when you become a provisional taxpayer? So whether you believe you are automatically, or whether you qualify to be one, especially in the context of a trust. Section 22 of the Tax Administration Act, and I quoted Hoop said, the provisional taxpayers have to register within 21 business days after becoming obliged to register. So I want to pose the question to Marteen in terms of, if you're becoming obliged to register, what does register mean in terms of Section 22? What does the taxpayer have to do? Is it a physical registration? Is it just knowing you have to submit and probably mark it on e-filing, registered on there? What, in the context of, where SARS is at, what does register mean?
Yeah, what it means is that you have to, on the SARS e-filing profile, you actually have to go and change your status. If you were not registered as a provisional taxpayer before, you would have to go on there and change your status on the e-filing profile itself. And that's in the menu. There is a link there which you can click on for status, where you can change it to provisional taxpayer, but you have to go and do it. Yes,
but now this within 21 business days after becoming obliged to register. I was just thinking, what, everybody's running around, you don't have the numbers. When are you obliged to register? Or does this mean just, on the provisional deadlines, do you then become obliged to register? Or would people get into trouble for not registering earlier? You know, when do you become obliged to register?
I would say, I mean, that's not clear at all, but I would say you would become obliged to register when you've got to render your first return.
Yeah. So I don't know, Keith, if we can get clarification there, given the fact that we got this new annual assessment, you know, when you're becoming obliged, because this could be differing from one year to the next, because especially in the context of a trust. It's not like a company that gets taxed and then they distribute dividends. 1 year the trust can retain, the next year they can distribute. It's discretionary. So I think this thing, you know, changing year by year for a trust. So again, they need to speak a little bit about a uniqueness of a trust.
Yeah, just a question. We're talking about registration as a provisional taxpayer, right? We're not talking about, we need to register the trust right from the beginning.
And it's as a provisional payer, yeah.
But once you have it, I mean, you can, I hear you.
Okay, Michelle, back to yours then. So trust that SARS have on record, or believe, or is it just a system error where you've probably been a provisional taxpayer, you were registered way back before 2010, or you submitted it last year, and now it seems like their systems believe you are now a provisional taxpayer and they remind you that you have to submit. So that together with the fact that, you know, if you're not a provisional taxpayer, you know, what the implications could be.
I just don't think they're very consistent in applying their own provisional tax rules, because it actually became clear to us last year during tax filing season that SARS actually regarded most of the trusts who distribute or attribute, they were saying that they were non-provisional taxpayers. And we were submitting it on that basis, distributing all the income, and we deal with a whole lot of trusts. And the assessment still came back. And on the assessments for 2022, those trusts were still listed as provisional taxpayers, because the status of provisional tax is actually on your tax assessment. And most of those trusts are now getting letters reminding them to submit the provisional tax returns. So there's no consistency. Surely the system must pick up that these trusts are not provisional taxpayers.
The system not say anything anymore, because a trust can be 1 year and the next year they can't be.
Yeah.
No, agreed, but they seem to be applying it correctly for individuals.
Yeah.
So it can change from 1 year to another. Yes, you're a provisional taxpayer. No, you're not. But for trusts, they're not doing this. I have not seen one assessment saying that a trust is a non-provisional taxpayer. Most of our assessments say, yes, you are a provisional taxpayer, even though all the income has been distributed or attributed.
Yeah. Okay.
So
again, Keith, I don't know if we can pick up the conversation with, you know, what does SARS want? You know, why do they do that? Why do they send these notifications? Why is it on an assessment that you are a provisional taxpayer if it is an annual kind of a calculation?
Yeah, I do like the idea of getting a general binding ruling that somebody said. That may be a smart move.
Yeah.
Because rather than just asking them informally, it really is a legal question. And then, you know, or the end of the year we could do an NHRC amendment or something. But I hear you. So it all binds into one.
Yes. Okay, and then Marteen, to get back to yours, once you now have ticked that register as a provisional taxpayer, then you obviously have to submit the provisional tax return. Can you just unclick it at some point and it will just disappear if you kind of rerun numbers and now you are, now you're not? So because once you are a provisional payer, you have to submit. So possibly then before midnight, 31st August and end of February, you have to make sure that that e-filing button is clicked correctly, either yes or no.
Yes, I would suggest you have to make sure you change your status.
Timeously.
Yes, do not be in default.
Yeah. Okay, and then clearly also have to submit tax returns over and above the provisional returns. SARS still doesn't have a non-compliance penalty for late submissions. But I have heard noises that they are going to start implementing it from January 2024 for late submission of annual tax returns as well. So it's probably time for people to just get their historical taxes up to date. Okay. Right, so what to pay? Here, I just wanted to kind of get my mind together because I got really confused when I started preparing these slides. So we've got 2 compulsories and 1 voluntary. So for every, the first and the second one, you estimate the full year. And then clearly we're talking about a basic amount that we may need to adjust, especially I think it's relevant for trusts because some trusts have got years and years outstanding. So there's an 8% per annum adjustment required. And a zero-based amount will not be accepted, if you have prior amounts. And you divide that then by 2, and then clearly the final one is the full amount that you can then deduct the first provisional payment. And then if you submit 4 months after, it will be regarded as a nil return. So that's kind of my picture. So we do a full and a full, so it's an estimation. So we can see how important it's becoming to take into consideration the 3 potential taxpayers in the instance of a trust, being the donor funder, the beneficiaries, and the trust, because the calculations here, I mean, it boggles the mind to just imagine what you have to go through to actually have your ducks in a row, to do full estimates, for all those 3 different types of taxpayers. So the penalties, from what's being said, even if you get the first provisional payment wrong, there's no underestimation penalty, there's no late submission penalty, but we have a late payment penalty and interest on such a late payment. So it looks, if we don't have our ducks in a row too much with the August one for all 3 of those different types of taxpayers, is that a big issue? Because I can tell you most tax practitioners just don't have all the information by August for what's going to happen for the rest of the year. Don't know. Marteen, what's your view? Is the first provisional not such a hairy one to worry too much about?
Yeah, I think we see in practice that lots of people lodge a nil return in the first provisional, but I think it is quite risky because it's got to still be an estimate of the total taxable income of the year, and SARS may change your estimate. So if you estimate it to be null, because you're lodging a nil return, they may change your estimate if they feel it's wrong.
Yeah, so I think the advice here is to like what SARS is moving towards kind of a real-time basis. And in that March tax in practice, the comment was made, integrity of data is going to become more and more important to keep that, update on a real-time basis. And kind of not have garbage during the year and when we have to do tax returns, then to try and cross-check to IT3s and et cetera, so to have the internal capturing and data integrity very close to being 100% accurate, because otherwise I just don't know how you're going to do the first provisional. Second provisional, hopefully, you'll get close to it. At least we got the 90% there. And while we're looking at that, the comment was made, can't we have the IT3Ts if, they are to be submitted early? Can we also work with, similar to like a 90% kind of accuracy? But yeah, the second provisional one is full of underestimation penalties, late submission, interest, etc. So I think that's where I really feel sorry for the tax practitioners to actually have these calculations.
Again, the same problem just keeps arising. That you're assuming that I need to estimate my provisional before the 7 allocation. So what would happen, I guess the fear is, there's a lot of money in there. You're going to allocate it all out, so you estimate 0. But SARS is saying, well, you got a lot of money out there. How can you do a provisional 0? Because there's things in there.
Yeah.
It's the same issue. And then similarly on a provisional return, I would argue the final return is 0 again. It doesn't help you unless what you want is you want to know the amounts, arising or built in there before allocation.
Yeah.
Now, if they leave a small portion behind, you got a bit of a problem.
Yeah.
I'm not sure if they do that. I can't. Well, I don't know. You tell me. Do people leave bits behind? By accident, usually. or not?
No, they don't.
They
But
don't
it
even.
is a plan
Yeah. Yeah. No, that's fair.
to be a provisional taxpayer, I would say.
Well, speaking about that, what we said earlier, I mean, if
Mm.
SARS, I mean, I mean, I don't know if anybody, you know, on the group have heard anything about SARS making further noises about the alignment of all the taxpayers to submit their annual tax returns on by the same date and being mentioned September, with sure all its own practicalities and challenges there. But then, you know, it's not gonna, then we probably don't want the trust to be a provisional taxpayer, because the only reason why we want is we want to buy a couple extra months to submit tax returns, right? So I think it's probably a timing difference, and we can work with what we've got. So I don't know how far SARS is with making like a single submission date for all annual tax returns. Okay, so when we was preparing, you know, I was just thinking, you know, what happens if trustees apply the law properly now? And SARS has started making noises, especially around the attribution rules. They're asking more questions. They're becoming jacked up. So what do you do if you've never done it up to now, and now for the first time you apply the attribution rules? Because I can assure you there are a number of tax practitioners who've distributed the trust income and capital gains to the minor beneficiary to pay zero or very little taxes, which was a leak for SARS, and that's clearly why they beefing up the attribution rule focus. So, Michau, what do you suggest? You know, should people go the VDP route? What should people do if they realize that they are going to do this for the first time, to do it in terms of what they were supposed to be doing all along?
They could possibly consider going the VDP route. It just depends on how big the problem is, obviously. I think in some instances, the actual distributions were also not disclosed to SARS. So the trust would have distributed the income, but the beneficiaries would also never had disclosed it. So in that instance, they can also go the VDP route. And maybe it will be good for the trustees when they have their annual trustee meeting this year, just to check with the beneficiaries if it was previously included or not. Because I think the whole IT3T system will actually get rid of this whole loss to the fiscus. The income will definitely, or SARS will now pick up by way of the IT3T of what should have been disclosed, whereas in the past they didn't really had the means of picking it up.
And I think through them adding these attribution rule questions, they're going to pick up the donors, funders, the fathers and the so forth that, you know, pump their stuff into a trust and save a lot of taxes by distributing it to their minor children.
Yeah, I've got a question on the VDP. There was an appeal court case that actually it's quite a big thing, that if SARS knew about, or you've spoken to SARS about something, you cannot apply for a VDP. I'm just asking a question because you've already declared in the past on your tax return in the names of the minors, for instance, because you didn't apply the attribution rules. So if SARS knows about this taxable income, it's been declared to them and disclosed to them. Will that hamper you in your VDP application or your ability to apply for VDP?
It could possibly, as you say, SARS would actually had known of the actual distribution. But it wasn't to the same taxpayer, so I'm not sure how they would deal with it.
Maybe an interesting thing to write about, Keith, because I see a big red flag here waving.
Fair enough.
Okay, and then just to flag it, I think it is probably a bigger problem than people anticipate, especially these family trusts where the attribution rules weren't applied correctly, and they are quite far-reaching. And most accountants that I've spoken to in the past never applied these things. 2 days ago, I demonstrated our system to a bunch of accountants here in Pretoria, and they said that they understand the attribution rules at SARS, that don't understand these.
Question, I mean, what are they doing? I'm just trying to clarify. I mean, if the income is arising in the trust, are they treating it as taxable income and then allocating it out? Or they're just not saying anything?
Yeah, what the accountants do is they just wipe everything out of the trust to save tax for that year. So the
That's
way
what
to
you
do it
thought.
is distributions, conduit principle, many times in the hands of lower rate taxpayers like children, who sometimes, less than the tax threshold. And it's those that SARS got the leak on, because taxes should have been paid if it was attributed correctly to the father, who's probably a salaried earner or, earns other income as well.
Yeah, so I mean, I guess my question is, where is the allocation? Are you saying that, well, there's the problem with the minor children, because I hear about the minor children trusts for the minor children. That doesn't matter that you paid it out to the minor children. It's still going to go back to dad, the donor. And is that what the big concern is, that they're following the cash and they're not following the donor? I'm just trying to clarify what they're doing wrong.
Yeah, so it's not cash, it's just distribution. It does not need to be cash.
Yeah.
But it was supposed to be taxed in a different person's hands.
Yeah.
And
that's kind of the problem, because, well, SARS wouldn't see that with what they have.
Well, they're going to ask the questions now in the new tax return, so they will know now.
And then once you do it, then maybe, well, I guess the problem is, once you admit it in this return, if they're smart, they'll go back.
Yeah.
Or they might go back.
But there was a leak. There was a leak, I can assure you.
Yeah.
Okay,
Okay.
so I think, yes, probably something we need to revisit, and maybe write an article about it or something. So in the tax in practice March 22, it was also said that, vesting trust and Bevin trusts are clearly non-provisional taxpayers, because they then have to submit their tax returns, with the first deadline being October. But the discretionary trust, and that's Michau and my kind of disagreement, trust may be a conduit for income and capital gains, SAIT said, and then they did not receive or accrue for their benefit, but for the benefit of the beneficiary, and then it's the beneficiary who needs to take care of the provisional taxes payable around that. Marteen, you made the comment when we discussed, is it just safer just to submit zero returns for all the trusts just to be safe? I also had an email the other day of somebody saying, you know what, we charge our clients for doing these. It's an extra cost, is it really worth, doing this and charging the client? What do we achieve by submitting a zero return?
Yeah.
I suppose what people are trying to achieve is to comply, to get a return in. But like I said before, it is risky.
Yeah. And I think if we can sort out the whole, clarity or definitions from SARS, it will solve this issue, Keith, because it costs time and money, even if you do like a zero return.
Exactly. It wastes SARS's time too.
And I think taxpayers have enough to keep themselves busy with, rather than just filling in things just to not be caught somewhere potentially.
Yeah, absolutely. I mean, I could see what their need is. They just need to be careful what they're looking for, that they're getting something useful and not noise.
Yeah.
That's the point. So what they really need is, they want to know how much, setting aside the tax law, if there was no such thing as tax on the trust accounts, what's happening? You're really looking for the financials of the trust before Section 7 is applied. And that's something that should be done just with the final return. And maybe because you've got other parties involved, maybe you want it a little earlier. And the only way to get it earlier, if it's meaningful.
Yeah.
So to me, to argue, maybe if you're looking for time, you say, forget the mid-year provisional. There is some benefit because of the IT3T that you want the provisional, not so much a provisional return indicating the taxable income, but a provisional reporting where this is my accounting or it's my trust accounting, not my IFRS accounting, my trust accounting amounts at the end of the year.
Mhm.
So then what I'm going to do with it so that I have something to back me up. But to just talk about taxable income, that's not what they really need. They really need the underlying facts before the taxable allocation. And the question is, when do they need it? That's just my view.
Sure. Okay, I'm going to speed up. I hope some people can still stay around 15 minutes. So I'm going to shoot now. So I just want to give the good news on the IT3Ts. We're back to a September deadline in brackets. Very important, just for 2024. So said to me they may change their minds anytime. So, but we have, the new deadline now. The issue there is when we look at a September deadline, if the beneficiaries now have already submitted their tax returns during July, August, being, pretending they non-provisional payers, they may have to now reopen their tax returns, and we may have penalties and interest there. So I think it buys us time to physically submit it, but we're probably going to have a ducks in a row earlier than that. And going back to the data data integrity and having things up to date is going to be really important. So I think the first case is going to be
question there. I mean, why do they want it in September? Wouldn't you think they'd want it to match their provisional or something? I'm not sure why
there's
they're
some
choosing
noise there.
September, October. When they choose the date, what are they choosing for? Because you want it to correlate. Are they worried about the IT, the trust distribution amounts, the IT3T? They were talking about the IT3Ts.
Yeah.
So when do you want your IT3T?
Well, they
what is it for?
they should have had it to pre-populate the returns that were already now done in my second last point. The return should have been pre-populated because that's the purpose of having the third-party data, is to pre-populate the beneficiaries' returns with the information. So September deadline for me just doesn't make sense now.
You want it, when do you file all these returns? Maybe I'm missing it, but I would think, well, again, they're more complicated returns. So generally, these are not going to be auto assessments, right?
Mm-hmm.
Is October the final date now for everybody? Or again, if you're a provisional taxpayer, you wait till the end of the year in February.
No, so for non-provisionals, it will be the 23rd of October, and then for provisionals at the end of January next year.
Yeah, so the end of January. So the point is, they need the IT3s to populate those returns for, at a certain point. Now the question,
September is too late. SARS, the only purpose SARS can use next year's submission for is to, go retrospective and penalize people for not having, disclosed it at the time. You do not have time to make up your mind and decide who's going to get what, because there's going to be penalties and interest for, some people who've already submitted their returns.
Yeah, because okay, so here, this is back to the issue. You kind of know where the money's going to go. Now, the IT3T, is that just for the beneficiaries or is it also for the donor? I'm assuming it's also for the donor.
That's just beneficiaries, yeah. It's
just beneficiaries. Okay, that's interesting. I would have thought they wanted
it would have been much cooler if they included the donor and funder in there as well.
So the point though is, okay, your difficulty is as well, you want them to put that money on that return, but you haven't done an allocation yet. So this is now beginning, you see where their problem is. They need to know that you're going to allocate the money even before you're required to do by year of assessment. Because if you haven't allocated, there's no reason to IT3T until February, right?
Yeah.
So, and then you also don't know the amount. That's the other problem. Okay, let's say you're all ready and you've got everything ready. You don't know how much money you're going to make at the end of the year. because maybe something goes wrong or maybe something goes super right.
Yep.
So, and so let me just say, here I'm a provisional taxpayer. I'm only going to know how much money I get out of that trust, the detailed amount, in the end of February, right? Because that's when, you know, I've got to sign that document. So what the hell? And we're only going to do it at the end because I only know the amount at the end. But yeah, even if I got a million guys doing it, I don't, especially for the bigger ones, I don't know exactly the amount. I won't be able to tell you the amount, right? Because there are going to be more variables. So if I've got the people, it doesn't matter. I still got more variables. So, you know, it seems to me that you would only be able to get the IT. It's hard to pre-populate. Maybe I'm missing it, but I don't know how you do it. Maybe that's why they're delaying. Sorry, I'm just being weird, but I'm just trying to get the mechanics around this.
Well, that's what the tax practitioners are sitting with, right?
Yeah,
To
no, that's
coordinate all these
I'm so
dates
sorry
and
for-
deadlines is going to become a mission, you know, and the trust is it's a tricky animal when you have to decide who's going to pay tax on the income and capital gains. In any event, we have run out of time, and I've got a couple slides, and then just Genoa quickly to speak about the PI. This was in last session slide, and that was the false profits one. So you can see the exclusion there's got to do with the IT3Ts. So I'm not going to go through the slide again. It just says who has to submit the IT3Ts, and there are only 2 types of trusts excluded. And that is the information that we have to provide. It's the income net of expenditure. We're giving capital gains and the capital amount, and all the risk questions have been moved back to the income tax return, such as, you know, any loans received, made, etc., etc. So the changes to the Income Tax Act, we have passive trust now, and I've written an article about it this week. I think that's
Phia,
very
these
welcome.
slides are not moving. Everybody's saying that we don't seem to be moving. We seem to be stuck on slide 5.
Stuck on slide 5.
Stuck on slide 5. That's what people are saying in the comments.
Oh my word.
Deborah's joined in, but there was somebody noted earlier.
Okay, well, I will send the slides as well. I don't know what's going on with this thing today. Okay, well, I don't even know how to. I'm just getting help here. Okay, I'm really sorry. I will. Can you see this slide now? Can you see the lot?
That's great. No, sorry, these things happen. You're just not focused there.
My technology seems completely jammed today. All I got right is the poll.
Yeah,
Can you
that's
see
good.
the big enough?
Yeah, that's good. We're now somewhere on 17.
Cool. Okay, I'll send you the slides. Okay, so we've got the passive trust now, which is very helpful. So from the 2023 years of assessment, so yeah, probably the dormant trust that we so gladly refer to in South Africa is probably, you know, sitting under there. So please don't deregister your trusts because there's extra risk and extra work to do now. Really go through and make sure the trust, you know, still serves a purpose. And now we've got this beautiful present from SARS where it's a little bit less cumbersome to complete because they excluded certain fields.
Okay, so you're not, it's if you have a passive trust, you just get to automatically knock off fields.
Yeah.
Without having to put nil, nil, nil.
Yeah. So the second last point is
return, but that's cool. I can see that. Okay.
Yeah,
sorry.
I think it's really helpful, and it's will go much quicker. I think it's like a 36-page document or something now. So it's just growing and growing and growing. So this will be helpful. Okay. Okay. Just shout if I'm getting stuck on the slides. Okay, so distributions received from other trusts. So I've got to make a big thing about distributions received from other trusts. It's probably with that recent court case. With a capital gain, whether it got stuck in the second trust. So they brought that in. Information on donors and funders. Here is attribution rules. So please, for those people, be mindful when you're forced to apply the law now, but you haven't done so in the past. And we're into this VDP thing, which you probably need to get professional help or give your clients professional help. The beneficial ownership declaration. I have searched through the guidance document and the return. I can't see a date that they want the information at? Is it when you do the tax return? Is it what it was as at year end? The SARS has got now access to the master's office, so there may be differences between, you know, the two time frames that we've reported at. So I'm just a little bit worried, and I think unless somebody has seen a date that SARS has put in there, I couldn't see it. We probably need clarity as at what date they require it.
Yeah, the view is because the information has to be completed in the tax return, and all information on the tax return is at year end. So
Can everybody else hear?
yeah, I don't know if you heard me.
Sorry, no, I kind of lost you. I don't know if the rest, it was my issue.
Okay, I was just saying the view is because the information for SARS has to be completed in the actual tax return, and all other information in the tax return is at year end, that this will also be as at year end. But you're right, it doesn't say so specifically anywhere, but that is the view at the moment of a lot of people.
Right. Okay, so again, we probably need some clarity there, and mindful for the questions from SARS, why there are differences, you know, when what changed, etc. Probably the biggest thing I've spoken about that last focus group is we now need to upload all this additional information, the trust instrument, the financial statements, resolutions, minutes, etc. So just be mindful of the mandatory supporting documents, which is new now. And then, Keith, I think we've spoken a lot about that. You see there's a lot of operational issues that you said the other day, and systemic issues, which we probably can escalate, and it'd be great if SAIT can just help where we can channel some of, you know, these issues.
So we have two channels. Look, if you remember, you know, for individual problems, we have a query hotline. And then the other one is, we tend to, there's regional meetings and there are national meetings, and we do that with the other RCBs. I think the most prominent of which is us and SAICA.
Yes, yes. Okay, and then the last one is we spoke about the other day in terms of should people who really were not supposed to have trust and now they're sitting with properties and other assets in the trust, should they be allowed by SARS to deregister tax-free? I'm specifically thinking about the family homes that transferred into a trust, just sit there, it serves no purpose. And to undo that now, there may be capital gains tax. There's definitely transfer duty. There's definitely transfer costs, which is attorney costs. So I can't see it being completely cost-free. But you mentioned, Keith, that you're probably looking at a submission to SARS there, at least on the capital gains side and the transfer duty then, right?
Yeah. So my thing is, with all these reporting requirements, maybe I'm wrong, but a number of people should probably deregister their trusts. They need to revisit if they're really worthwhile. So I thought the home is a good example. There are too many people who've been convinced to put their house in the trust, which doesn't make any sense from a capital gains purpose. And also, you're going to sell the house, and it just doesn't make any sense. That's not, the assets that go in the trust are assets that you will never really use again. That's my view. But the question is, for getting its home, do a lot of people, is there a push by a number or questions being asked by a number of taxpayers? Indeed, they would like to deregister a lot of these trusts. Have you had people coming in yet saying, look, this is just not worth it anymore. I just got to call it and just bring it back to where it was? Or do they just deregister by themselves and we don't know what the hell we're doing?
They normally speak to the accountant/tax practitioner and get advice, and they should, because just to do it, it does trigger quite significant costs, depending on the size of the asset. Okay, so I think that was for today. I don't know if you got any final comments, Marteen, Michau, Keith. That was really useful, practical. I wish we had like 2 or 3 hours because there was so much more to talk about.
Yeah, I hear you.
I just have a final comment. Everybody can go and have a look. There's a comprehensive guide to the income tax return for 2023 for trusts on the SARS website now, with the effective date 14 July 2023.
Yeah. Is there just a question, because the explanation is there with lots of pictures. Do they have just a plain ITR 12T that you can download? I can't seem to find that one. Again, I haven't looked that hard. Or is it just all online and you do it?
I don't think you can. I got hold of the actual document, but I don't think it's readily available that you can just download.
No, okay, that's oftentimes they don't do that, which is very annoying. But they look, the form is pretty, the explanation is pretty good. But it's nice to you want to look at the form as you get the explanation. You don't want to, okay.
Yeah.
Okay,
Yeah,
good.
no, I haven't seen it available as an example, not at all.
Yeah, okay.
I will
So
have a look.
This is bad research on my part. Okay.
I will have a look on my emails, then I can forward to you guys.
Okay, that's good.
And
That
I
would be
think
good
one
to see.
particularly annoying thing as far as the beneficial ownership stuff is concerned and the tax returns, the tax return beneficial ownership stuff is, unfortunately, at this point, you have to capture, if it's the same person as the founder, trustee, and a beneficiary, you have to capture them every time. So as they're saying, it's just a first round interim arrangement. They are looking at, getting drop downs, which should be really easy. And it's really annoying, it's putting extra time on the tax practitioners now to capture the same data over and over.
Yeah.
And then there was this one comment field where there's a lot of people not knowing what the supporting documents they have to upload. They want like an organogram per entity type, kind of along those lines. I've clarified with SARS, they actually did not really need that for trusts. It was more relevant for companies. So that's where you typically have like a company structure with a holding company, subsidiaries, etc. And they actually want to see the organogram. So that was what they were referring to. People uploading weird and wonderful things there just to upload something. But that is what the intention was. So, and then obviously if the fields provided for the beneficial ownership wasn't sufficient, then you can upload it there. So
Where's that? Which the field that they wanted the organogram?
It's a upload, it's a document upload where you have to upload something. It's
Okay, they didn't tell you what it was.
Yeah, it's just set a per entity type a document that you have to upload.
Yeah, they should have just said organogram, but they got legalistic, I guess. Because
Yeah.
I think that's what they want in the LBC and elsewhere. You really just want an organogram. It's more than you want. It's actually really the bottom line.
Yeah.
Before you want all the ultimate beneficial owner and the words, you just want a picture. That's what you really want. And if you see the picture, the whole picture, one picture, good enough, rather than filling in separate fields.
Yeah.
That's really what you're looking for. Yeah.
Okay, so this brings us to the very last one, which we have partnered with Genoa to help us do things in a cost-effective way. And I looked around a lot to see where we can get protection for poor trust administrators and independent trustees. And we've come up with a product specifically for, trust services and independent trusteeship, and to try and do that in a cost-effective way. And I'm just going to get Genoa to quickly take you through. We see a lot of, especially accountants, tax practitioners. I was one of them a couple of years ago. I said, you know what, I'm covered through my SAIT PI cover. If I'm acting as a trustee and you're actually not. So it's very important for people to go and actually physically understand and read their insurance schedules and make sure what's included, what's excluded, what services you provide. Back to that one page at the top, which one of the 4 or more services do you provide, and do you have physical cover for each one of those? And maybe you're not aware that you should take out cover, and that comes back to the question that you can have a pricing conversation with your client now, because the independent trustee is really picking up an extra layer of risk now with the 10 million rand fines or 5 years in prison.
That's the thing. Just a question. We provide accounting cover and tax cover if you screw up the return and if it's caused by an accounting error. But it's not fiduciary insurance.
Exactly. That's the big
thing. Because I think that's there's a much higher level of risk.
Yeah.
You say you've got Genoa. I'm happy to sit down and talk with them and see if there's something worthwhile there. To see if we can get some sort of group cover there.
Absolutely. So so over to Camilla from Genoa just to guide us quickly, and it's going to be really a couple of minutes, so sorry for the overrun, but I think it'll be worth it just to have a quick look And I'll also
Yep.
even send the okay, I think let's just see. So yeah, I'm going to share in multiple participants.
Hi, everybody. I'm just waiting for Phia to give me the ability to share my screen, and then I'll get going. But just to give you a broad overview of who Genoa is. So Genoa is a liability specialist. We specialize purely in professional indemnity cover and medical malpractice. We've got a host of professional indemnity policies that we offer to the market, some of them being accountants, architects, legal practitioners, business rescue practitioners, and most importantly, fiduciary practitioners. So we've got a fiduciary policy that speaks specifically to curators, executors, and trustees of trusts. And then what we've done is we've partnered up with trustees, where we offer a bespoke solution that can cater for your needs. I'm just going to please see if I can share my screen here. Perfect. All right. Let me just. Okay, perfect. So, just to give you an understanding of who Genoa underwriting managers are, and who the role players within this environment is. So, broker is Ginsberg Financial Services. Mitzi is the allocated broker on this solution, and she's on the call. So, if you have any requirements with regards to perusing your PI policies, she's your go-to. The underwriter is Genoa Underwriting Managers, where I'm from. Our insurer is Sapphire Insurance Company, who's been around since 1987. And then our reinsurers are Swiss Re and Munich Re, the two largest reinsurers in the world. So that should give you peace of mind in terms of the capacity that we can offer to the market. Why is professional indemnity cover required? So as an accountant, legal practitioner, or financial advisor, you could often act as a trustee, which carries a unique risk. Sometimes and often unknowingly, these professional PI or professional indemnity policies may specifically exclude trustees' work. So professional indemnity policies will make reference to the policy indemnifying the insured in respect of its legal liability to pay compensation as a result of any actual or alleged negligent act, error, or omission arising in the performance of your professional duties. Professional duties, as an accountant, those would be accounting services. As an attorney, those would be legal services. Or as an FSP, those would be financial services. Trust work would often fall wide of those services you undertake on a daily basis, and in turn, your PI policy may specifically exclude those. So, as an example, we've got a legal practitioner's PI policy. But trust work is not covered under that policy if your trust work makes up more than 50% of your total fee income. So it's important, it's paramount that you get your broker to have a look at those clauses, those exclusions, to make sure that you're adequately covered. So this leaves the trustee exposed to pay compensation for any legal for any negligent act, error, or omission arising in the performance of these duties. With the recent amendments to the South African trust legislation, it's become important for independent or professional trustees to review their policies to ensure that the appropriate cover is in place. And this is why I would certainly suggest that you speak to Mitzi Ginsberg. The partnership between trustees and Genoa, why is that important? So, trustees have negotiated preferential rates and a bespoke solution that is strictly and only available to practitioners making use of the trustees system. Why would Genoa offer preferential rates and a bespoke solution to trustees' clients? So I've just jotted down a few that should give you some understanding. So the trustees platform is built with security and privacy in mind. Access levels and user roles limit what information or functionality a user has access to. All interactions of the system are recorded and a full audit is provided. The platform boasts an accounting module that has been developed specifically for the unique requirements around trust accounting in South Africa. Financial statements are prepared in real time. The system provides audit trails for each transaction, and the system has a document vault ensuring quick access to all documents. Now, based on the above, Ginsberg Financial Solutions, the broker of the solution, is confident that the only two elements of insurance that a trustee would require is professional indemnity cover and misappropriation of trust funds. So I'm just going to run through what those covers entail. So again, general underwriting managers offer the combined professional indemnity and misappropriation of trust fund policy to trustees of trust and authorized users of the trust application. So what is professional indemnity cover? This covers the base costs and compensation, including claims costs, fees, and expenses, as a result of any actual or alleged act, error, or omission which arises in performance of trust administration as a trustee. The extensions that can be purchased under the professional indemnity are interest-bearing deposit advice. This is where the insured fails to possess trust funds, loss of documents, all costs and expenses for the replacement or restoration of documents following loss or damage. So, for example, you get hijacked and recover those funds. Investment advice on the suitability of any investment and or advice rendered by the insured regarding the manner in which trusts should invest those funds. And then lastly, tax advice. And this is advice regarding tax or taxation, which should comply with the taxation legislation of South Africa. What is misappropriation of trust fund cover? So this protects the insured in the event that there is a theft or misappropriation of funds belonging to the trust by any principal, partner, or employee of the insured, provided that A, the funds were held in a trust account in the name of the trust, and B, the property was entrusted to an employee of the insured on behalf of the trust and not to any other agent or independent contractor of the insured. We've got three options for misappropriation of trust funds. The first being blanket cover, where you would cover all salaried staff members. The second being named positions, where you would cover a particular position within the organization. And then named persons basis, which I would never suggest, because that covers the person. So it would cover Camilla Jane Logie. And if I were to ever leave the organization and Pit Pompies had to replace me, you would need to make sure that you notify the insurer of that change. And then in the open market, we've got other extensions or sections of our fiduciary policy. One being fidelity guarantee, which is similar to misappropriation of trust fund cover, but that protects the insured in the event that monies are stolen from the business account and not from the trust account. Now, we didn't see it necessary to include FG because it's not onerous on the business owner if business funds are stolen. Where it is onerous and where liability may attach is when funds from a third party are stolen. And then we've also got third-party impersonation fraud cover. But again, based on the solution that Trustees has, that's not something that we found was necessary. So third-party impersonation fraud cover is where you act on a fraudulent instruction to pay monies out to who you thought was your client, but actually a third party that has intercepted your emails and you've now acted on that fraudulent transaction. Some claims example that we thought we would share with you. So tax-related claims examples: failing to submit tax returns or settle outstanding accounts, causing the trust to incur costs or penalties. Accounting and banking related claims, those could be financial mismanagement. You perhaps failed to invest money in an interest-bearing account or incurred unnecessary charges due to delays in the estate. And then administration, failing to obtain valuations on assets and selling assets for under market value in an estate, causing a loss to the heirs, failing to wind up an estate timeously, and failing to give effect to the wishes of the testator. Now, our underwriting considerations. All principals, partners, or sole proprietors and employees taking on formal appointments, trustee appointments, must provide proof of membership to at least one of the below bodies. So, South African Institute of Professional Accountants, the IRBA, SAIT, FPI, Phia, or the LPC. Why is a professional body so important, and why do we insist on you guys belonging to one? So it promotes a culture of mutual accountability within the profession. It maintains healthy standards in terms of competence and performance. It promotes ongoing human resources development by providing the necessary diversity of professional skills. It makes it possible for all persons with the required competence to obtain professional recognition. It promotes sound governance of the profession, and it provides a regulatory framework. So some of the considerations that we look at when underwriting a professional indemnity policy. So there are 4 things we look at, the first being your gross fee income. So your premium is calculated on the estimated fee income for the next 12 months. So when the insured provides the declaration of the actual gross fee income at their next renewal, any variance, positive or negative, will be taken into consideration. I must warn you that if you ever underdeclare your actual gross fee income, then averaging would apply. So, for example, the insurer would have the right to only pay 50% of the claim should you underdeclare your actual fee income by 50%. So it's paramount that you are honest and accurate in those calculations. Qualifications of principals, your business description, and the business activities of the firm are also need to be accurate. So the reason we need those to be as accurate as possible is because we've got a particular treaty with our reinsurers, and we need to make sure that your business activities fall within those authorized treaties. Claims experience. If claims have been disclosed, we may need additional information to understand the full picture of what has transpired, but we'd also want to know what corrective measures you've taken to ensure that those sorts of claims don't occur in the future. We also need to know if there are possible potential claims that may arise or if there are intimated claims. And then the type of work that is done. Different types of work present different risks to the underwriters. So naturally, this is a consideration. And then requirements prior to binding cover. We need a fully completed proposal form. We need proof that there's an agreement between yourselves and trustees to use the application. The reason we need that is because if you are a trustee's client making use of that application, we will give you a 25% discount on our bespoke solution. And then we need the IDs of the principals. We need proof of membership to one of the listed professional bodies, which I discussed earlier. We need your previous insurance policy schedule. The reason we need this is because we need to ensure that your retroactive dates are matched so that there are no gaps in cover. We need your full claims history. We need the declaration of no claims or intimated claims. And then we need the signed acceptance. And that is it from me.
Right, so I think we're all super tired. Thank you very much, everyone, especially the panel members. This was really a useful conversation. I will put the recording on YouTube and on our website, and apologies for all the hiccups with technology. Thanks very much. I don't know if there's any final comments, otherwise we can close.
Great job. Appreciate it. Interesting on the insurance.
Okay. Thanks very much. That brings us to the end. Apologies for all the technical hiccups. I don't know what happened with Zoom today. I'm a big Zoom supporter. At least I got the polling right. I will put the recording on YouTube as well as on our website. And thank you very much for everybody's time. Thank you very much to the panel members. This was super useful. And I really appreciate your participation. I'm sure everybody learned a lot. Thanks. I will send out the next session, and then we'll find another hot topic to talk about. Have a nice Friday.